The most opportune times to be trading markets is when there is significant volatility, whether it's euphoria or in fear. Euphoria is easy, you got long-term positions, the market goes up over time, and it's pretty much sitting back and letting the positions handle themselves. But there is significant opportunity to capitalize on fear and big drops in markets as well. The most important aspect is having a game plan established in advance. The last thing that you want to be doing is making decisions with heightened emotions when fear is really high. So if you're making a game plan when everything is all sunshine and rainbows and there's no fear around, all you have to be doing is looking at a checklist or a game plan that you've already established and just following those steps. And when you have those steps laid out in advance, it's much easier to ensure that your actions that you are taking are well thought out, you've got the proper risk management in place, and you can capitalize on the opportunity that this significant volatility brings. So the two main ways to capitalize on fear are, of course, shorting and making money on the way down, but also buying capitulation fear to be looking for a longer term recovery sometime in the future. So you need to be determining which of those you're focused on. If you're looking short, there are 3 times leveraged ETFs like SQQQ or SPXS that I utilize to not only hedge and protect my portfolio, but also size up and try and profit from when there is an excessive move to the downside. If you're looking to capitalize on the fear in terms of entering long, holding longer term mindset, you need to ensure that you have cash ready to go. And then you deploy that capital. Back in 2020, when was COVID? 2020, when COVID caused the market to dump in a massive fashion, I had cash that I had sitting around in my IRA, and that's the first time that I ever bought long-term no-touch S&P 500 positions, because I was saying to myself, if I'm not going to be buying in this magnitude of fear, when am I ever going to be buying? And so it was just the kind of thing where I had to stomach the known fact that I'm not going to nail the bottom. I'm going to be scaling into this weakness, and it will likely benefit me years down the road. Fortunately, it didn't take that long for that benefit to come around, but having that capital waiting for fear to utilize it was key to be able to enact the game plan that I had. When there is significant capitulation and fear, some of the things that I look for to mark a bottom are a significant gap down after already being extremely oversold, leading to a very high volume climax. Volume climaxes appear at the tops and bottoms of significant moves because you have the most activity from both directions, both the bulls and the bears. So a volume climax bottom, you got the most selling and the most buying happening right at the same time to give you that very high volume candle, and ideally one of those bullish reversal candles like a doji or something with a long lower wick that shows that dip buying, and of course follow through in the coming days that let you know that at least a temporary bottom is then set. Once you have a temporary bottom, you could sell a little bit of a position to be able to put your cost basis closer to the low, but using that low is a way to limit your risk just in case this isn't the bottom and you're wrong and we get another leg down. So when it hits the fan, make sure you've got a game plan that's been established already. You're enacting that game plan, and you're either shorting on the way down or you're sitting with capital and waiting to buy longer term. And of course you can do both, but that definitely requires a bit more of an advanced mindset to be able to pivot from being bearish to bullish in a short period of time.